In this presentation, we will record an adjusting entry related to prepaid insurance into QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the View dropdown and the Open Windows list. We're going to now open the reports. So we're going to go to the Reports dropdown. We're going to go to the Company and Financial. We'll scroll on down to the Balance Sheet Standard report. Balance Sheet Standard, changing the dates up top from 01/01/20 to 02/29/20. So that's January through February 2020, and then we'll say OK. We're going to be focusing down here on prepaid insurance. Now, prepaid insurance is one of those things that can be done basically two different ways. If you're doing the adjusting entries at the end of the time period, let's first think about the concept. When we think about prepaid insurance, it's a little different than other types of insurance or other types of expenses, because other type of expenses, we usually get the bill after we have incurred the expense, such as the telephone bill, utility bill, and so on. The uses of the facilities, the use has happened, and then we get the bill. Therefore, we enter the bill, expense it at that point in time. However, with prepaid insurance or any insurance, we're going to have the insurance happens in the future. Therefore, when we get the bill, we have not yet received the coverage. So there's two ways we can deal with that. One, we can do what we normally would do under if we learned normal accrual accounting. And this is the best system to really set up, especially if you're going to have an adjusting process at the end of the time period. If you're not going to have an adjusting process and you just expense it at the time that the bill comes, then that's fine. You're just not going to have the adjusting process, and you're not going to have the basically comparability from month to month if you prepay insurance all in 1 month for, say, a year or 6 months or something like that. You'll have a distortion between the income statement accounts from 1 month to another. Let's take a look at that. For example, if we go to the reports up top, Company and Financial, and take a look at the Profit and Loss report, and we take this from 01/01/20 to 02/29/20, then in the expense category down here, if we purchased, say, in January, a full year's of insurance, we would have a large $11,000 insurance expense here in January, nothing in February, and that would basically distort the month-by-month comparison. Now, if you just note that, you might say, okay, that's no big deal, I'll note that, that's okay. But if you want to be it on the accrual basis, you want to do something about that so you have the comparison that's actually accurate in terms of usage of the insurance, not when we paid it. And the proper way to do that, or the easiest way to do that, is to say, hey, when I enter the transactions during the accounting process, it's best to think of the accounting process as different than the adjusting entries, possibly even different departments. Then you can think, hey, when I talk to the accounting department, we're going to say, every time you pay insurance, just put it into the prepaid insurance account. And then we, periodically, at the end of the month, will adjust out of the prepaid account and into the expense account the amount of the insurance that had been used and consumed during the period. That's how it will typically be set up. Now, it could go the other way, too. You could expense the whole thing. In other words, have this whole $11,000 on the profit and loss report, and then you would have to adjust out the amount that had not yet been used and put it to prepaid insurance. So if you don't tell the accounting department what to do, in other words, they will probably just expense the entire insurance, and then you'll have to reverse it out. If you set up the plan properly, you really want it to go to the balance sheet because it's a permanent account, and therefore you don't have to deal with that timing overlap of closing out the accounts at year end. So this $11,000 then represents 12 months of insurance. Now we're going to expense the time period that has passed at this point in time. And we're going to say basically that 1 month has passed, so we only have the coverage through starting in February. So then we'll say February is going to be $11,000. 1 month has passed. I'm going to take this and divide it by 12, and that means 1 month of insurance has been consumed of the yearly insurance that has been paid of the $11,000. 916 of that $11,000 needs to be expensed. Therefore, we need to reduce the $11,000 by that 916 or 917. We need to put the other side to insurance expense. I'm going to round it to 917. How can we do that? Well, traditionally, we would go to the company up top and go to Make Journal Entries, and we would do this with debits and credits. However, here, we're going to basically use the register because it is easier to do. We have two accounts affected. We have the prepaid insurance and we have the insurance expense. We can't use the register for insurance expense because it is an expense and therefore doesn't have a register, so we will be using the prepaid insurance register. To get there, we're going to go to the lists drop down up top. We're going to go to the chart of accounts. We're going to scroll down to the prepaid insurance, which is actually up top. Prepaid insurance, there it is. I'm going to double click on it to go into it and get to the register. Here is the register. We're going to put this in place as of 2/29, and then I'm not going to put anything in there. I'm going to say this needs to be decreased because we're in the prepaid account that needs to be decreased. It's at 11,000. We're going to decrease it by that 917. And then the other side is going to go to insurance expense. So insurance expense is the other side. This is going to be adjusting entry. I'm just going to call it ADJ entry. And then we will say enter. See what it does. Well, it brings this account down to 10,083, which in essence is going to be the 11 months of insurance, because it was 11,000 divided by 12 means that this is going to be how much per month, and it's rounded, so it's going to be off by rounding because I rounded it up. But then times 11 months remaining will give us about this 10,083. Closing this back out, closing this back out, closing this back out. Back to the balance sheet, we see that 10,083 here. If we were to go into that, double clicking on it, we see our adjusting entry labeled as an adjusting entry. It is a journal entry. Double clicking on that, we see the journal entry. Here it is here. If we double click there, we see our debits and credits. Closing this back out, closing this back out, closing this back out. Now looking at the profit and loss, we're going to go to the profit and loss report. We then scroll down, we see the insurance expense. Going into the insurance expense, we see the adjusting entry. The adjusting entry, then double clicking on it, we see our journal entry once again in the register. Double clicking on the journal entry, we see the debits and credits. Closing this back out, closing this back out, closing this back out. That, of course, is an increase to the expense, decreasing the net income. Notice a lot of our adjusting entries are going to end up decreasing net income. Most of them will. Okay, so that's going to be it. We're going to go then to our trial balance, check our numbers. We're going to go to the reports drop down, accounting and taxes, take a look at the trial balance. Within the trial balance, we'll change the dates from 01/01/20 to 02/29/20. Here's going to be our trial balance. Check your numbers, see if they match up. If they do, great. If they don't, check the dates. Then use the auto zoom to see if you can figure it out. That's great practice. If you would like to push forward anyways and there's a problem, or if you just want to move forward in the problem, we will have backup files so that you can go to most points within the problem, restoring the backup file, having the numbers up to that point in time, and being able to push forward from there.